What's up, guys? Welcome back to Everyday Money. Now, if you guys have been following the stock market in any amount in the last 2 or 3 weeks, you've known that the markets have been going down. The market that I follow the most is the S&P 500. That's the 500 largest companies in the United States put into an index and assigned a number to it. And since it peaked around September 2nd or so, we have been looking at a decline of about 4% in the last 2 weeks. That is a pretty significant number considering that you're looking at an average of 10% return in any given year. And the reasons for this are numerous. Consumer confidence is down, just generally in the United States. People aren't really overall happy with the direction that the country's going. Inflation is rising, both in the official inflation number and in the unofficial inflation number, where you see prices are really starting to take off, and that really hurts people's confidence in the economy. And then there's also plenty of international news, such as the Chinese crackdown on tech companies, the Chinese limitations that they're wanting to put on everyday citizens, such as, for example, the limits that they're instituting on the amount of time that teenagers can play video games. And there's also the issue of the Chinese Evergrande Corporation, where it looks like they are in a very bad way as far as not being able to make their interest payments on their loans that they have for the property that they're developing. And this is even getting to the point where it's starting to become a possible too big to fail type of deal. Either way, all of this comes together to be a negative for stock markets overall, especially the major markets in the United States that have been on a bull run, essentially almost uninterrupted, with the exception of the minor coronavirus pandemic dip that it had for really just a few months. Since about 2009 or so, we've just been kind of creeping our way up, and it really is one of the largest expansions of the economy and the growth in the stock market in the history of the stock market. So what I want to talk with you guys about today is what you can do when the markets are going down, and why this is actually can be a major entry point for you if your time frame horizon is somewhere between 10 to 30 or 40 years. If you got several decades, and I know that you guys do because I look at my analytics and I see that I have a lot of either folks that are younger than me, I'm in my late 30s, and there's a lot of folks in their 20s to their 50s, and even those that are getting longer in the tooth in their 50s probably still have several decades left to live, God willing. Even if you're not going to be working for those decades, your money will still be growing even if you aren't working. So the first thing that I want to get into is that you only lose money on paper when stocks go down. If you don't do anything, if you don't sell, if you don't do whatever, you have only lost the paper gains that you have gained up until this point. The amount of shares that you have will still be the same. And I've wanted to make this point, and I made this point to another friend of mine who said that he talked to his financial advisor, and he said, and they think that the market is going to go down by 25%. No real time frame really, but 25%. And I want to stress this, that is from his financial advisor. So if you pay a financial advisor, take their advice, but definitely fact check it. And the biggest thing that I want to stress to you is that I am not a financial advisor. I'm not your financial advisor. I'm just some guy on YouTube who has an opinion, and this is the way that I am working my finances right now through this dip. And if it does become a crash, and they do happen quite often, pullbacks, crashes, corrections, this is what I'm going to do. What I like to do is just turn off the media, turn off the news, turn off all the negative stuff that you're going to be seeing, and then just let it ride. Because as your money goes down, if we go down 20, 30, 40, 50%, which I think will not happen this time around, I just think that's just my guess on this, is that we could get a correction, but I don't think it's going to be a full-on crash. Is that as the market goes down, as you put more money into it, and a lot of times when the market goes down, this is a great time to ramp up your contributions to the market, because you're going to be buying even more shares than you were before. If the market would go down by, let's say, 50%, if you put in the same amount of money you would be getting double the shares. If you put in twice the amount of money, you would be getting 4 times the shares that you were previously putting in. So when those numbers come back up, when the market comes back, and historically it has come back every single time and gone on to new highs. It's always gone on to new highs in nearly every market, the stock market, crypto markets, housing market. They always go back up, and the only way that they couldn't go back up is if there was some sort of just major, like the entire world economy collapsed, and then we would all just go down all at the same time. You got to look back in time, and now looking in 2021 here, who wouldn't put every dime that they had into the stock market at the peak of 2007, or the peak of 1929, or the peak of Black Monday, or the day, right before the coronavirus hit? Every single person out there who has any idea about how stocks work and how markets work and how they typically always go up, myself included, would dump every single dime that they had on those peaks. And so my point to this is even if we are at a peak right now, even if at, let's see, 45.36 on the S&P 500, that is the peak, and we go down 40% from here. In 10 years, you would have wished that you've put all of your money in at that particular point if you could have known that. Now, granted, it would be much better dollar cost average over a long period of time, or be able to call the bottom and put all your money in then and really ride that up. But nobody out there, not the president, not Warren Buffett, not your financial advisor, not me, Graham Stephan, or anyone else is going to be able to accurately call a top or bottom. If you could do that, you would be getting paid billions of dollars by one of the major financial institutions, and that is just not the case. So what do you do if you're not comfortable seeing a 20, 30, 40% decrease in your paper gains on your stock portfolio? You can put in stop loss orders where you can put in that you want to trigger a sale at a certain price, or if the price declines by a certain percentage, it will automatically trigger a sale. Now, the thing is that will lock in wherever that is. So if it goes down by 10%, you lock in at least 10%. And sometimes by the time that those orders transact, if it's falling very fast, you might lock in 11, 12, 13%. But that is a good way that if you need to protect your money, like for example, you are maybe those 55 or more year-old folks and you want to protect that money, that is a way to protect that money. The thing is that if it does go down 10, 20, 30% and you sell, you just panic sell, you have locked in those losses, and unless you are able to accurately call the bottom, which has historically never been something that people can do, even the people that are paid millions of dollars that spend 80 plus hours a week thinking about this, they can't do it. So I don't know why you working your office job or working your construction job, or me being a YouTuber and doing real estate, there's no way that I will be able to call the bottom on that. But I think one of the most important things to do here, and I say this on a lot of the videos I do on crypto, because a lot of those days on the cryptocurrency stuff, things can go up and down by 30%. It's not even, out of the question for something to go up or down by 30%. I always say you gotta zoom the chart out. You gotta look at the long game on this. And this is just like when we talk about the market's always going up over time. When you look at these charts on a 1 day or 5 days or 1 month or a very short time frame, it can look super scary, either super up, super awesome, or super down. And right now, like the Shiba Inu coin that I follow and I just kind of make some small bets in, that went up by 30% in 1 day, but it really just got back up to where it had been previously. It really hadn't made any new gains. So when you look at the stock market and you're saying, wow, we're down 2% today or whatever, like for example, today, we're down 1.7% in the S&P 500. For 5 days, 2.71%. And that, that's a big amount. If we go out to 1 month here, we're down almost 3%. But you hit that 6 month mark and we're up by 10.5%. Go even farther out to the year to date, we're up 17.76% on September 20th, 2021. So we have made almost 2 years worth of gains in about 9 months. Go out to a year, 32.81%. 3 years of gains in a 12-month period. Out to 5 years, 101.3% gain in the S&P 500. And, that's going to include that coronavirus pandemic related crash that I think was about, let me put the number on here, we're looking at 31% down during that, and it looked like everything was going to hell, which it did look like at the time. But again, that's where you have to zoom that chart out. Now, if we go out to the max, we're going back to 1981. So that would include Black Monday. That would include the 9/11. That would include the dot-com bubble, the Great Recession, the coronavirus pullback, that December crash that we had in 2018. And we are looking at a 3,764.26% gain over that time. So when you guys are looking at these daily charts and these really short-term charts, and you're freaking out and you're saying it's down 3% or it's down 4%, or if it's a month-long chart and it's down 10% and it looks like the world's coming to an end, zoom that chart out so that you can see the big picture and the way that the market always goes up, even if it doesn't look like it is going to, and it looks like we're headed straight to the bottom. Guys, if you like this video, be sure to give it a big thumbs up for me. That really helps me out in the YouTube algorithm. If you haven't subscribed yet, hit that subscribe button down below to grow your wealth, increase your success, put you on the road to financial freedom. I appreciate you guys watching today, and I'll see you in the next one.